Welcome to Markets Now. I'm Michelle Rook along with Garrett Toy Ag Trader Talk, and a mostly lower day except for hogs. And Garrett, let's talk just a little bit about a little bit of a breather in both soybeans and in the meal market. So that just a little bit of profit taking, or is that market got enough weather premium in it for the time being?
It feels like short-term profit taking. I mean, we traded beans up to this 1550 level, and meal after traded to new 10-year highs there yesterday, seeing a little bit of profit taking. But it really is very quiet. I mean, if you look at corn, front-end corn volume was the lowest since about January 11th. So there really isn't much going on. Whether we're trying to, bide time here for the next move one way or another, it feels like we're a little bit tired. Beans, particularly, May beans continue to find resistance around this 1537 area. That's been the highs every time we've traded here the last 6 to 8 weeks. So, we're still in an uptrend here, but we've got a lid, and the chart formations are very similar in corn and beans, where we have this ascending channel, and then we just have this lid above the market. And what's the catalyst to drive us higher? We're coming up the 1-year anniversary of the Russian invasion of Ukraine. Here in a couple weeks, in a week or so, we're probably not going to have that again, but the market is watching this re-escalation over there right now.
And corn hasn't done much since you and I talked last. I mean, we went up and traded up in the upper end of the trading range, couldn't take resistance out. How many times does that market do that when you have this coiling pattern before you pop out of the channel one side or the other?
That's the thing. Usually, triple tops never hold, is the old saying here. But I think the market really is kind of just trying to keep their powder dry. I think that they're unsure of, the lack of commitment to traders for 2 weeks. They're really unsure of what we're looking at as far as market length and how this market structure is set up. Euronext was able to issue a commitment to traders today, so hopefully, knock on wood, we can get a commitment to traders report out on Friday and kind of get things marked to market and figure out where we're at. The big things are going to be what kind of corn length have we had over the last 2 weeks, how big is this money market long in meal, and especially given the big rally in wheat, is how much short covering there was on this big move higher.
It'd help if we'd get some export demand to push the market too, though, wouldn't it? Especially from China?
That has been a very slow road to hoe. U.S. corn, world corn FOB premiums are weaker across the board, Argentina and U.S., and we're both within $2 either way. There's no significant advantage to the U.S. We are the cheapest, but it's a pick a market where they can either pick U.S. or Argentina depending on freight. Our big question, we put out a research piece today looking at China's import pace. USDA currently has them at 18 million metric ton. And currently, based on their import pace and what they bought from the U.S., Ukraine, and Brazil, they've got commitments of about 7 million metric tons. So the recent comments out of Brazil has been that, they're going to wait for the safrinha corn crop to come because it's cheaper and U.S. corn is so expensive. But logistically, last year, that means that basically that China's going to have to import about 11 million metric ton out of Brazil in July, August, September. Well, last year, when they had record corn exports, Brazil exported about 18 million metric tons. So if China does buy all their corn out of Brazil, it's going to be just like the bean market at harvest. They're going to monopolize those exports. China could account for about 60% of Brazil's corn export pace. Well, that leaves Japan, South Korea, Southeast Asian countries kind of out in the cold as far as being able to source corn. So that is if China buys it. They're going to have to start doing something here soon, or else they're going to run out of time.
So wheat's had a pretty good run off the lows. It looked like we were putting war premium in, taking a little break today. And was that just because we have some forecasted rains? And then do you expect this market, if we don't get those rains, just to keep going up?
It feels like this market is extremely short. The last time we knew, we have the escalation of the new attacks from Russia, the increased shelling. We had the grain export corridor concerns. I don't think even the Russian analysts, we don't pay attention to what the Russian agmen or what the Russians are saying about the grain export corridor. Everything is going fine. It's just trying to saber rattle here, and the market's kind of again become immune to these type of situations. So for the most part, I think that we were weaker today on these increased weather forecasts, the southern plains. Again, the export demand hasn't been that great.
Right.
I'm not really sure, as dry as things are in the southern plains, anything helps, but I don't think it's going to move the needle a whole heck of a lot as far as, market's expectations of production estimates here. But it obviously, those producers that are sitting in the southern plains are obviously going to welcome that moisture.
Healthy correction in the cattle today, but do you think that market is kind of a buy the break mentality now, or was that some cattle hog spread unwinding, or what?
It felt like some unwind there. I mean, obviously we got April's. I move over the April's. This 163 is area of support from 2015. We just kind of keep grinding higher here. Cash is up another $2 this week. Last time we spoke, it was a late trade. It was a late trade again this week, and I think the trend is definitely that the supplies are tight enough that they're holding things off until later and later to do the trades here. So I think the bias is, again, that we're going to see cash higher again this week, even though it is only Tuesday. I think everyone is expecting, another $1 or $2 higher in cash. So that's kind of where the market's going to move to.
Hogs probably got a little push on renewed ASF concerns too.
Yeah, we had that the new outbreak in Hong Kong. We had a decent rally. In fact, the Febs are getting into expiration here, but these hogs do look, or the Aprils, excuse me, I should say, are near this 88 level again, which was we definitely have broken the downtrend 3 days ago. So that technically it looks like we've bottomed here near term.
Okay.
Just whether anybody wants to step in and buy it at these levels. I mean,
Yeah,
pork at. Oops, sorry. Go ahead.
Nope.
Oh, the pork is definitely the cheapest option at this point. I mean, you see a ton of discounting on retail levels. I think that at some point we've got to have the tire meet the road here as far as demand is concerned.
Okay. Thanks so much. Appreciate it. That is
Yeah,
Garrett Toy with Ag Trader Talk and Markets Now.